Okay, everybody, here we go. It's me, Gregory Mannarino. It is Thursday, November 10th, 2022. Are you watching this? Okay, a phenomenon is occurring. Stock futures are surging higher, and I mean surging higher, up like 800 points on the Dow. The 10-year yield more than cratered. We're like at 3.92. The dollar has taken a freaking nosedive. You got cryptocurrencies rebounding across the board. You got gold and silver higher, crude higher. It's freaking epic. And do you know why? Well, let's see. Inflation continues to rise. Yes, it continues to rise. But, are you ready for the but? Lower than forecast. Let me explain this to you with regard to these forecasts here. They always project higher. So when these numbers come in, they look lovely and fantastic. Wall Street right now is celebrating the fact that inflation continues to climb. Not just that. Real wages falling off of a cliff here. What people are actually earning based against surging inflation. Imagine my surprise. Imagine your surprise here. You can't make this stuff up if you tried to. It's impossible to do. So inflation continues to rise. People are making less money on a real basis against the wages against actual inflation, and the stock market is ripping higher. 10-year yield cratering, like I said. Why? Why is this occurring here? Because what's the setup? What have you and I been hearing and seeing? What have we discussed right here on this blog before anyone else? Okay, that moving forward, we were going to see central banks, which include the freak show known as the Federal Reserve, the horror show known as the Federal Reserve here, starting to ease back on their aggressive stance with regard to raising rates. So the situation is very simple. The Federal Reserve has been raising rates, will continue to raise rates moving forward, but at a slower pace. Markets loving that. And it's still not going to work because this is not a rate problem. And inflation is still going to rise. So what they're going to do, again, on the back of this, is, again, for the next time we get this CPI report or any kind of inflation numbers, they're going to, of course, forecast higher. So when the numbers come in a little better, they can say, oh, inflation is rising. It still continues to go higher, but it's better than we thought it would be because we economists are retards. Yeah, it's too much. Make any of this stuff up. Oh, here we go. Okay, let me calm down a moment. All right. So let's just see how this plays out. Again, the sign of relief here is this 10-year yield. I mean, you want to talk about a nosedive? 3.92 the last time I looked at it, from like 4.18. What a move. That has got to be pretty much history being made and the dollar getting decimated. So anyway, here, let me just read some of this to you so you can laugh about this. Here's a headline. Number one, U.S. consumer prices rise. But less than expected. Oh, but still rising. Then you got Fed President Barkin. This is, again, he's one of the creature features that they float out. When they have certain people that the Federal Reserve calls on certain presidents to, consistently float out. It's the ghoul. The ghoul's one, Lex Luthor. With those eyeballs? Yeah, he's another one here. Barkin's another one. He's part of the crew here. And he's saying that rising inflation could cause economic instability. Can I please get a because look, let me ask you this. Okay. Gauging from what you know from following this lovely blog, gauging from what we just found out that inflation continues to rise. It's rising, but less than expected. Do you believe that central banks are going to stop inflating? Because the real issue is the money supply. The real issue is a currency crisis. Central banks deliberately sucking out the purchasing power of their currency. You know that. They're not going to address this. You're not going to hear any freak on any freaking mainstream channel talk about that. Oh no, I was watching Bloomberg this morning, and they floated out some like chief economist from some big bank here with his nice suit on, and he looked really nice and handsome, all groomed before the camera, and he's talking about Federal Reserve is raising rates because they really are serious. They're serious about combating inflation. Really? Duh, sir? Is it working? No. How about knowing it's not going to work? It's not meant to work. But they float out the freak show, people. They float out the freak show. So, anyway, inflation continues to rise, but less than expected. And again, they always forecast higher. I was writing this stuff down. They always forecast higher. So when it comes in, a little bit better, they can say, honestly, people make any of this stuff up. So anyway, what can we expect here? Okay, big narrative change. So they're going to utilize this to their advantage. Of course, this is all, set up in advance. And I believe we're going to hear this narrative change get even greater. And they're going to tell you, as always, that what you're seeing is not real. Even though you're going to the store, you're paying more for everything, rents continue to rise, food inflation, energy inflation, whatever it might be. Even though you see this stuff happening, and you see it in your wallet here, they're going to tell you it's not real. So just be ready for that. Now, let's not lose sight of something here. So BlackRock, I want to talk about BlackRock a little bit. We know what they said. We can expect all hell to break loose. I don't want to discount that. I don't know what BlackRock is actually. I believe BlackRock is talking about instability here in the debt market. Maybe it's something else on their radar. Or maybe it's just a distraction. But keep in mind that we just heard that after the midterms, and here we stand, all hell was going to break loose. Let's see what happens here. Look, don't think for a nanosecond, I love that some false flag, some black swan, something that nobody can predict, honestly, is going to occur because it's being set up. You understand how this works here. Nothing at all ever is by accident. So when some major event occurs and it affects the global economy, you have to realize that it's already been thought out. They had it set up already. Who knows what they're going to pull off? Don't underestimate these creatures. They will do whatever they have to do. And this is part of it here. Inflation continues to rise, although less than expected. And central banks are going to do, in reality, again, they're going to tell you to look in one place. But what they're doing here is clear to me, and it should be clear to you. They're going to continue to inflate the money supply with no end in sight. As a matter of fact, they're going to inflate the money supply even greater. And with regard to the Federal Reserve and other central banks' reverse repo program passing vast amounts of cash back and forth between institutions, this is going to grow exponentially as well as they try to fake liquidity in an illiquid market. I'm talking about the debt market here. So that's where we stand today. So let me just reset the stage for you. Prior to this video, stock futures were off to, actually, as a matter of fact, let me look at this in real time. As I'm doing this here, let's see. 10-year yield, 3.91. Dow futures up by 800 points. The NASDAQ futures up over 4%. You got Bitcoin, crypto surging higher here. Bitcoin is up over 10% right now. This is just absolutely incredible. Now, the US dollar down 1.26%. That's pretty phenomenal here. And crude oil, of course, getting a bit higher. So look, what does this mean in the grand scheme of things? Sure. Look, things are not getting better. They're not going to get any better because central banks are going to continue to inflate. They're not done. They're going to fulfill their end game if that means they have to kill, and they will kill millions and millions and millions of people. The lie, the narrative, okay, inflation is higher. It continues to go higher, but it's better than forecast. Could you imagine? And people are earning less money on a real basis, and the market's taking off. Only in a freak show, in an absolute complete freak show, would you see something like this. But you and I, we're ready for it. We're ready for whatever. They can do whatever they want to do. Whatever they want. I don't, really, you and I, we're ready. We already have the high ground, you and me. We've been prepared for what's coming. And in no way has this situation been fixed. But the market's all giddy. Let me show you this. Yeah, that's what it's spraying its shorts all over the place. They're getting all tingly everywhere. I mean, come on, man. But nothing's changed. Inflation continues to rise. People, I dare you, try to make this up. It's impossible to do. I couldn't do it. Maybe you could, but look, we expected this. Did you and I really not expect this? Of course we did. It's just well, it's lovely. You know why it's lovely? Because you and me are together right now, and I love this part. I really do. All right, look. So I have set the stage for you. Let's see what happens throughout the day. Let's see what else they do. Are they going to float out some freak today to help the market higher? Who knows if the market's going to give all this back? I mean, we've seen this before where the market has shot higher like this and all of a sudden we've gone negative. We've seen 1,500 point swings. I wouldn't be surprised to see a 2,000 point swing in the market. Is it going to happen today? Hey, your guess is as good as mine. But keep your eye on that 10-year yield. The MMRI is going to crater this morning. Crater. Based upon what the dollar is doing right now, falling off of a cliff, 10-year yield getting crushed. Anyway, I love it. I can't help myself. I really can't. All right, look. I will see all of you at the end of the day. Please share the video. Comment. What do you think about all this? Lovely or whatever it is. All right, I'll see you later.